What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Nicholas Fawcett, Senior Economist at the BlackRock Investment Institute. Noisy economic data reflect the volatile new regime we've long been noting, and we expect this to persist. US inflation data has been very volatile from month to month, and the full impact of tariffs is still to come. Add renewed conflict in the Middle East, and we're likely in for more market swings. We expect the Fed to hold rates steady this week as it waits for clarity on tariffs. Ongoing inflation pressures from a tight labour market will limit how far it can cut rates this year. Inflation rose less than expected in May, but wage pressures are still too high for inflation to settle at the Fed's 2% target. We're starting to see tariffs lift consumer prices, think appliances, but the full effect is still ahead. Longer term, we see megaforces like aging population and geopolitical fragmentation and the AI build-out adding to inflationary pressures. US growth has also been volatile, strong one quarter, shrinking the next. And trade policy shifts add to uncertainty. But hard economic rules, like how supply chains can't be rewired quickly without disruption, act as a constraint, as we've seen in US-China trade talks. And we brace for more policy-driven volatility as the 90-day tariff pause ends on July 9th. We see uncertainty around the economic impact of tariffs and inflation volatility, keeping the Fed on hold for now, including at this week's meeting. Longer term, persistent inflation pressures from tariffs and a tight labour market will likely limit how far the Fed can cut, even if tariff-driven supply disruptions dent growth. We think long-term US bond yields have further to rise, keeping us underweight. We prefer inflation-linked bonds, even if they're yet to reflect long-term inflation pressures, we think. On a strategic horizon of 5 years and longer, we like private credit, as returns for debt with floating interest rates have risen with rates more broadly. We favour infrastructure equity, like stakes in airports and data centres. Its returns are buffered from inflation, and it outperforms amid supply constraints. But private markets are complex and not suitable for all investors. Looking outside the US, tariffs and any sustained rise in oil prices could mean weaker growth globally. The European Central Bank cut rates this month, but signalled a pause ahead, even after lowering its 2025 growth outlook. We think the ECB has more room to cut as wage pressures cool, growth weakens, and softer demand helps inflation subside. We still prefer European to US investment grade and high-yield credit. That has served us well, but we keep an eye on relative valuations. Here's our market take. Volatile economic data, like the CPI, reinforces our view that we're in a regime of greater macro volatility. We expect the Fed to keep rates steady, and megaforces keep us overweight US stocks. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
This material is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.